Ladies and gentlemen, good day and welcome to DEE Development Engineer Limited Q1 FY’25 Results Update Conference Call, hosted by Equirus Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vaibhav Shah from Equirus Securities. Thank you, and over to you, Mr. Shah.
Hi, good afternoon, everyone. On behalf of Equirus Securities, I would like to welcome you all to the 1Q FY’25 earnings conference call of DEE Development Engineers. Today, from the management team, we have with us Mr. Krishan Lalit Bansal, Chairman and Managing Director, Mr. Samir Agarwal, Chief Financial Officer, and Mr. Sanjeev Sancheti, Head Investor Relations, Ultra LLP. Without taking much time, I now hand over the call to Mr. Sanjeev Sancheti, Head IR, to introduce to the management. Thank you. Over to you, Mr. Sanjeev.
Thank you, the Equirus team. Thanks a lot for arranging this first earnings call post the listing of DEE Development. Good afternoon to all the participants. Before I hand over the call to Mr. Krishan Lalit Bansal for the opening remarks, I would like to draw your attention to the safe harbor statement in the earnings update presentation, which was uploaded on the BSE and NSE website. Please go through this very thoroughly. Over to you, Mr. Bansal.
Thank you. Thank you, Sanjeev. Good afternoon, everyone, and a warm welcome to all of you to this first investors call of DEE Development Engineers Limited after our recent listing in June. Before we dive into the financial results and operational highlights for Q1 FY’25, I want to take a moment to express our deepest gratitude to the entire investment community for the overwhelming response to our IPO. Words cannot fully convey how much we appreciate the trust and confidence you have placed in us. Your support not only empowers us, but also drives us to hold ourselves to an even higher standard. We are fully aware of the responsibilities that come with this, and we will continuously strive to achieve the best outcomes. Since this is our first earnings call following our listing, I would like to take a moment to provide a brief overview of our company. I shall cover our core business operations, key value propositions, and growth drivers. After this introduction, our CFO, Mr. Samir Agarwal, will delve into the financial metrics and provide detailed insights into our performance. DEE is India's largest provider of process piping solutions with advanced manufacturing facilities strategically located across the country. We specialize in engineering, procurement, and manufacturing services for industries like oil and gas, power, chemicals, and pharmaceuticals. Our product range includes high-pressure piping systems, pipe fittings, industrial pipe stacks, and modular pipe skids. We also excel in handling complex metals like carbon steel, stainless steel, and specialized alloys such as zinc alloys and HEST alloys. We are extremely excited to announce that we have just last week secured a significant order valued at $40.71 million from Dow Chemicals Canada ULC for pipe spool fabrication. I just want to highlight that this is just the job work value. It's just the conversion value. It doesn't include the material value in this. This order is slated for execution between September 24 and December 26. The company's PAT was 32 million in Q1 FY’25 with a PAT margin of 1.7%, expanding 456 basis points over the Q1 of FY’24. The company remains committed to automation and capacity expansions. We are establishing the new Anjar facility, which will boost our capacity from 6,000 metric tons to 15,000 metric tons, bringing the total capacity to 112,500 metric tons. This facility will focus on oil and gas sector, while our Palwal facility will cater to the growing power sector needs. Its proximity to Kandla Port will reduce logistics overheads. Our strategy is to capitalize on the rising capital expenditure in the power and oil and gas sectors by proactively enhancing our capacities as well as our operational capabilities. As part of our growth strategy, the company has recently ventured into a new business vertical focused on design, engineering, fabrication, and manufacturing of pilot plants. These pilot plants serve as a pre-commercial production system, enabling to assess the feasibility of the processes before scaling up to full-scale production. As highlighted in our earnings presentation, we always proactively prepare for the upcoming CapEx cycles of our target sectors, anticipating the present and ensuring growth in the power sector. We have strategically invested in capital expenditure ahead of time, positioning ourselves to fully capitalize on the opportunities presented by this cycle. Thank you all. Now I would hand over the call to our CFO, Mr. Samir Agarwal, to talk about the financial matters. Thank you so much.
Thank you, Bansalji. Good afternoon all, and thank you for joining our Q1 financial year 25 earnings call. Before we open the floor for question and answer session, I would like to provide a brief overview of our financial performance for the quarter. I trust everyone has had the chance to review our earnings presentation and press release. While Bansalji has already covered the business outlook, I will now focus on the financial performance of the past quarter in greater detail. The primary objective of our IPO funds were to fund our working capital requirements and prepay our outstanding borrowings. We are pleased to report significant progress on these fronts. Of the total IPO proceeds of 3,250 million, we have already utilized 935.32 million so far towards 179.82 million towards working capital needs and 755.50 million towards repayment of debts. Our revenue from operations grew by 17.6% year-on-year, reaching 1,850 million in Q1 FY'25 compared to 1,473 million in Q1 FY'24. Revenue from piping division saw a 13.2% year-over-year growth, contributing 81.3% to our revenue, whereas heavy fabrication division saw a year-on-year growth of 295.2% with sales contribution of 7.4% of the growth. So operating EBITDA in Q1 FY'25 saw a robust year-on-year increase of 76.1%, reaching 248 million, with an operating EBITDA margin expansion of 445 basis points to 13.4%. Profit after tax, that is PAT, for the quarter stood at 32 million against a loss of 46 million in Q1 FY'24, with a PAT margin expanding by 456 basis points year-on-year to 1.7%. As of 30th June, our order book stood at 8,032 million, up from 8,001 million as of 31st March 2024, while the recent order of $40.71 million from Dow Chemical has further strengthened our order book. We expect a few more large orders in coming future. With a strong order book outlook coupled with our strategy to capitalize on the increasing capex by our customer segments, we expect strong top line as well as bottom line growth in near medium term. Since we will come out with more specific medium term guidance after the next quarter result, as we draw up our revised medium to long term business plan. We deeply value your ongoing support and engagement as we advance our strategic initiatives. We are committed to achieving our goals and delivering strong returns, and we look forward to sharing our progress as we work towards creating long-term value for all our stakeholders. Thank you all, and now I open the floor for question and answer session.
Thank you. We will now be conducting the question and answer session. Anyone who wishes to ask a question may press star and one on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question comes from the line of Mahesh Bendre with LIC Mutual Funds. Please go ahead.
Hi, good evening, sir. Thank you so much for the opportunity. Sir, we raised around 297 crores through IPO, and within that 175 crore was for the prepayment of or repayment of debt. So we have, I think, as per the presentation, we have paid only 76 crores. So, I mean, why the entire amount is not utilized so far?
Thanks, Maheshi. So just wanted to clarify you that we had already made a payment of 175 crores towards repayment of working capital. However, the amount of working capital demand loan which were actually paid out post 30th June. That is why this amount is shown as 75.5 crores. So I just wanted to ensure you that we have already paid 175 crores before 10th of July 2024.
Sure, sir. Thank you. Thank you for the clarification. Sir, we have received an order of $40 million from Dow. So, what kind? I mean, is this the first order, or similar orders can expected in future?
So this is the first order from Dow Chemicals. This is definitely going to be a game changer as far as our business is concerned, because it's first of all, it's a very, very large order. Plus, we are getting it from Dow Chemicals. So, that's further adding a feather to our cap. So, this particular, shows the faith which our customers have in us to execute, such large orders, particularly in, the North American continent.
So going forward, is it fair to assume similar orders in over the next 9 to 12 months? Or is it the best?
Yes, sir, definitely. Yeah, many more orders are in the queue. Of course, they may not be as large as this particular order. But, there are many large orders in the queue as yet. And we shall be announcing, as and when it comes. But, I tell you that, many orders are in the, advanced stage of negotiations. And, every month we are expecting a very good inflow.
Sure. And sir, last question from my end. Another facility, I think, how much is it, what is the progress on that particular facility in terms of capacity ramp up?
So, Maheshi, as we have already started our commercial production with introduction of 3,000 metric tons of capacity at New Anjar facility, and with effect from 1st October, we shall be rolling out another 9,000 metric tons of capacity. And post that also, we will continue our capex to complete that facility by expanding the total capacity of 30,000 metric tons from that facility.
Sure, sir. Thank you so much.
Thank you.
Thank you. A reminder to all the participants that you may press star and one to ask a question. Next question comes from the line of Vaibhav Shah with Equirus Securities. Please go ahead.
Thank you very much for the opportunity. My first question is regarding the Anjar facility. So as you have highlighted, the facility is largely automated and with the power and oil and gas works get segregated. So what kind of margin expansion do we anticipate once the facility is fully operationalized? Also, what would be your guidance for the full year in terms of the revenues and margins, and also the order inflows?
So, Vaibhavji, thank you for your question. And if as far as the margin expansion is concerned, since we are going to cater our oil and gas sector needs from this facility, so this facility will bring in 3 to 4 types of savings in terms of, or increasing in terms of margin. Number one. since it is in proximity of the port, so it will bring down our logistics cost. Number two, when we have a new facility, all the machinery or plant and machinery new setup with a lot of amount of automation, the operational efficiency will be much better than what we have at Palwal facility. Third, since we are expanding our capacities, therefore the allocation of fixed cost shall get reduced. So these all three things will add to our margin profile, and it will be properly seen once we come down to third and fourth quarter.
Sir, if you could just highlight about the full year guidance for the revenue, margin, and order inflow.
Sir, actually, we, as you know, we haven't reached to roll out our 9,000 metric tons of capacity as of now. So it would be operating with effect from 1st October. So we are in the middle of all these things, and in the meantime, we are also gathering the approvals from various of our customers of that facility. So it will take little bit time.
Understood, sir.
So in a month's time, we will make sure to give you a good guidance in this respect.
Understood, sir. Sir, my second question is regarding, so there are situations arising from the global geopolitical tension, and the transit times have increased, so does the freight cost. So nearly our 40 to 45% of business comes from the export. So is there any impact in terms of the freight cost, or let's say on the working capital side?
So as far as our orders are concerned, our orders are FOB basis. So the impact of the cost increase in terms of freight cost does not come to us. But as far as our import is concerned, there may be some enhancement in terms of import logistics cost, and that will not be substantially.
Understood, sir. Sir, my last question is regarding our addressable market. So what would be our share or the scope of piping from total capex happening across the oil and gas sector and the power sector? Also, if you could highlight the order pipeline for these sectors and on the wind side, which is related to our heavy fabrication business.
Okay. So as far as our share in the market is concerned, we are not very much bothered historically in terms of how much share we are handling. So as far as our capacities are there, we have never ever faced any dearth of order except the period for the COVID. So whatever we had the capacities, we always had a substantial amount of work orders to utilize our capacities. So this is your the answer to your first question. And the second question, as you know, there is a lot of expansion in power sector, especially when the government has already announced 80 gigawatt of thermal energy. So we are expecting good amount of orders from that domain of work. So the orders which we were expecting will flow somewhere in the middle of fiscal 26. Now we are expecting it to get those orders much earlier, maybe in the last quarter of this fiscal or maybe the first quarter of the next fiscal.
So since you are asking about the heavy fabrication, our heavy fabrication unit is also fully occupied, so we do not have any challenge as far as the order booking is concerned for that particular unit.
Thank you very much for answering my question. I will join back in.
Thank you. Next question comes from the line of Harshit Patel with Equirus Securities. Please go ahead.
Thank you very much for the opportunity, sir. Sir, firstly, given that there is a very strong pipeline for both supercritical power plant projects as well as nuclear power plant projects, so where do we stand in terms of qualifications? And have we started receiving any orders, the kind of pipeline that we have? If you could throw some light on these aspects, that will be very helpful.
Sir, as far as conventional power sector jobs are concerned, we are fully qualified. There is no hold on any of the items, where anybody can say that we are not qualified. We are qualified with BHL, we are qualified with NTPC, we are qualified. Any other player in the, Indian power sector market who shall be putting up these supercritical power plants. So there's absolutely no issue in that. But as far as nuclear sector is concerned, we are already approved by Nuclear Power Corporation of India. There's no issue in that. However, since the jobs which come from the nuclear sector, particularly from Indian customers, they run for years and years together. So, we are not very keen to go full blast, particularly for the nuclear sector in India. However, we are in advanced stage of discussions with some foreign customers where we are having good opportunity to do the nuclear business in the overseas market, for which we have already qualified with that particular customer.
Understood. Sure. Sir, secondly, on the oil and gas pipelines, oil and gas piping front, you have mentioned that we had a MOU or the tie-up with a global player, a global EPC player. So have they started taking offtake from our new Anjar plant, or that is still some time away? So have we already started realizing revenues from this particular tie-up? I believe we were already doing some revenues with that player. What I'm trying to gauge is that has there been any particular ramp up in that direction?
Sir, we are in very, very advanced stage of discussion for that particular matter. We are calling that as step 2. In that step 2, we shall be formalizing all of our agreements, and that's very much on the pipeline. As a matter of fact, it may happen in coming few weeks, but I'm still not very sure on that. But, the discussions are going on full stream for particular thing which you are saying. And, we are discussing with them at least two to three very big jobs, once that agreement gets formalized for step 2. For step 1, we have already executed the jobs, and we have already tried the machinery, and it's working very well.
Understood, sir. Thank you very much for answering my questions, and all the best.
Thank you.
Thank you. Ladies and gentlemen, as there are no further questions, we have reached the end of question and answer session. I would now like to hand the conference over to the management for closing comments.
So just wanted to thank all of you for joining this call and taking out time for this call on a particular Raksha Bandhan day. And as a management, from the management side, we can assure we are fully looking forward to grab all the possible opportunities in our sectors. And we will do and deliver the best in coming times. Thank you so very much.
Thank you. On behalf of Equirus Securities, that concludes this conference. Thank you for joining us. You may now disconnect your lines.